Okay, so our final presentation is Ian Green from eCo Financial Technology.
Thanks very much. I just want to talk briefly about three things. One, why I come to be doing what I'm doing. Secondly, what it is. And thirdly, how we're getting on. I've spent virtually all of my career implementing advanced mathematics in software for financial institutions. For the first half of my career, that was largely at software companies. And over recent years, it's been running a large part of the global trading business, electronic trading business for Credit Suisse, which I was doing until I left at the end of last year. And in that last job in particular, we learned a bunch of interesting things. The one is that you can replace a lot of human traders with machines. And the machines do a better job, and they make more money, and they're less volatile and less inclined to fraud, and they're cheaper. And that sounds like great news, and it was. And from a revenue perspective, it was actually quite a success. But the more disappointing thing is that it doesn't really economically, in this environment, solve your whole problem. Because even when you've done all of that stuff on the trading side, you've still got a bunch of costs that come to you. And that isn't the cost of the machines, and it isn't the cost of your people. It's kind of the tax of being at a bank or an institution like a bank. And on the technology side in particular, it's a very hard problem to solve. Now, in the kind of bank that I used to work for, the IT costs were enormous. In the firms that have told me their numbers, they range from $3 billion a year to $8.5 billion a year, which, you know, it takes a lot of electronic trades to do anything about a $5 billion a year bill. And also the amount of software that funds is also enormous. You know, we all know about what the software companies do. And they, I used to work for SunGard in the 90s, and they had, 80, 100 apps. The banks of large size each have around 5,000 applications, that kind of number. So they spend a lot of money making a huge amount of software. So as I say, if you're running an electronic trading business and you want to do something about that cost base, which you can't just wave away, it's very, very hard. And we did all the things that people do that I can talk about, and decided none of them worked. And the fundamental problem that we saw was that all of the banks and all the similar institutions are doing essentially the same things in parallel at the same time at essentially the full cost. And whereas 5 or 10 years ago that might have been interesting things, it might have been a new way to do pricing or give clients new products or improve services or controls. These days, the majority of that work is very, very standard and very generic, and it's largely defined by the regulators. So over the past, for example, I'm going to say 5 years, when everyone's been trying hard to bring those $5 billion a year costs down, what they've actually flatlined. And what's actually happened is a proportion of those costs that have gone towards meeting various compliance and regulatory initiatives has gone way, way up. And the amount of the money that's gone on stuff that we actually find interesting has been driven to zero. And meanwhile, you have 5,000 applications to look after. So what on earth do you do? And so that's kind of the backdrop to why I end up not running electronic trading at Credit Suisse anymore, because the prognosis of it in current situations is not fantastic. Now, as I say, the problem is the massive amount of duplication in the industry, which isn't addressed by any of the utilities or cloud initiatives or software firms. And really what we want to change is that dynamic of banks expecting to make pretty much all of their own software for themselves. And it starts off with the expectation that you're going to do your own pricing software or your own risk management software. And before you know what you're doing, you've got 200 apps for managing corporate real estate IT. And that's kind of where banking is today. And we kind of adopted route A, plan, if you will, to that kind of question of how you address mutualization of those costs, which is to say we want to, well, step one, set up a marketplace so that financial institutions can buy and sell software from each other, which is the easy step. That's about 10 minutes work. And step two is look at all the reasons why it won't work and fix them. And that's the hard piece. So for the past year and a half, we've been figuring out what to do about that. And for the past, since this calendar year, we've been doing it on our own money. And without, I mean, I don't want you all reaching for your Facebook or whatever. I'm not going to spend a long time talking about what we do. But I'll tell you some of the principles about that have driven us to do things the way that we do it. The one is that any software solutions we care about, we're only interested in exchange of source code, which isn't to say other things can't work, but in a very complex environment where you likely to have a lot of customization, a lot of integration work, software that comes with that source code in some kind of open source feeling paradigm where people are encouraged to contribute back isn't something we want to be involved in. So we're a kind of source code sharing. We have a source code sharing methodology. Secondly, you need to know whether it's any good. If a bank's got 5,000 apps, you want to guess how many of them are shit, it's probably quite a large number. If you want to guess how many of them are fit to go somewhere else as is and will be expected to work straight away, it's probably a very small number. So an important part of what we do is to say, if I've got a source of software, which could be a bank, it could actually be a software firm, it could be a startup, we want to see that source code and we want to score it, and we want to score it independently and with the precise aim of telling whether it's likely to work somewhere else. And so that's an important part of our methodology. Also, we want a commercial model. At least one major bank has tried to launch a big open source initiative a few years ago, and it was very well intended, but the website is no longer there. And the reason for that is if you don't know how much money to spend on something, it's very difficult to say how much money you should spend on it. And we think it's important to have a commercial model. And we're not really, while there are people that would do stuff pro bono in banking, that doesn't get very far. And so we need to have a commercial model that explains how everyone benefits from the work they do on a fair basis. And a normal Red Hat type open source model won't work for banks. And the reason for that is typically they might have individual pieces of software that spent maybe $100 million on, which they don't want to give away for free. And the bit of getting your money back that involves professional services doesn't work for banks because they've got no infrastructure to do it, and one bank won't support another, nor will it take software support off another. And I would also argue the same is true for small software companies, which is if you've got a great idea about something you want to make, it's very tempting to get the consulting dollars because it looks like recurring revenue, but really you should be making your product better and not just doing whatever it is the big client you just signed asked you for a while. So it's important to have a model that addresses that. And another principle that's very important for us is we don't want to have lawyers involved in software sales. And if we can't find, having participated in many industry initiatives where people have tried to do things on a mutualized basis, they just take forever, and largely an important part of that forever is the time that's spent and the amount of money that's spent engaging lawyers. So it's a very central part of our methodology that we can shrink wrap the procurement process, and every discussion you have when you're entering into a financial transaction is about commercial terms and not about issues of law. So it's kind of what we worked out how to do. So it's a marketplace. We've created a marketplace where there is infrastructure for that, and we want to encourage financial institutions that would otherwise spend a bunch of money making yet more software to spend less money making that software. And conversely, if they've actually made it anyway and they just spent a huge pile of money making something, or at least commercialize it and get some money back. I think so that's kind of what we're doing. Where we are, we incorporated at the start of this year. We have got a tremendous pipeline, but we're not really about closing deals this year. Really, the important thing for us is to establish a legal architecture and a technology framework that encourages people to believe that this thing can happen, which sounds implausible to many of the people we speak to. We've spent a bunch of time getting banks to sign legal agreements that are unlike any legal agreement they've ever signed before. For example, they don't know whether they're buying or selling. They don't know who the counterparty is. They don't know what the asset is, and they don't know how much it's going to cost, but we want those framework agreements signed. And we've got, I don't know, 10 or 20 firms to sign those agreements now, including banks, hedge funds, software companies, and consultancies, all of whom can play their part. We originally got a bit of money off my old employer to set us up. We have an option on more money at the end of the year, but frankly, we don't want to take it. And the reason for that is not that we don't want more money, because we do want more money, because it's going to take us a long time to become financially viable, but we don't want to be seen as a creature of the banks. An important part of what we're trying to do, which is enshrined in the name eCo, is it is an ecosystem. And there are lots of people around the place, including a bunch of people here, that might have things to do, and we want to make the whole system more open. We want to make the sources of supply more varied. We want to make everyone who's got something that they can do able to do it in our framework. We're trying to do very, very little as a company. We're not making any software. We're not doing any consultancy. We just want to make these transactions happen and make our money in an honest way from the things that we do. One thing that we found in doing this is that a lot of our focus has been on getting Bank A to buy some software from Bank B. Typically, the areas we've focused on have been areas where no one disputes that there's an intellectual, where no one's going to say there's an intellectual advantage to be had from having a proprietary piece of software built in-house. So, for example, if a bank has to, one bank isn't going to be better than another bank because they implement anti-money laundering regulation in a better way. Everyone's got to do it the same. And in fact, it's better if you're using the same software as someone else. Similarly, the way that you connect to markets, you can argue the same. Similarly, all the regulatory reporting stuff, similarly corporate real estate. So we've been after those. I think recently one thing that surprised me a bit is that some of the trading companies that I used to deal with that have the very best platforms for electronic trading are now coming to us and saying, well, they want to sell their platforms as well with source code available because they think there isn't an edge in the technology anymore and they just want to get some money back from it, which has been interesting. And another interesting thing that we didn't really appreciate is that some of the business side users at the banks that we speak to routinely want to buy software of software companies, especially smaller software companies, and they just can't do it now. And they can't do it because of the vendor risk, and they can't do it because of all the obstacles they're put in the way to do it, and the IT guys telling them that it will never work. And so we've had people come to us say, well, can you get that software company that I want to deal with put their stuff on eCo? Because then you're going to go and get an IBM or a Cognizant or someone to stand behind it and offer a support contract so I don't have vendor risk. And you're going to get them out of being swamped by the deal that they just signed with Citibank, which is going to take their 5 smart people out for the next 2 years. And the IT guys are at least going to get the source code so they might believe they could do something with it. It's going to be less hateful than buying a piece of application software from a vendor. So we found that, as I say, there's not necessarily where we expect it to go, but we are seeing some opportunity to bring in niche providers into a environment that regulators and established IT managers are struggling, effectively making very difficult otherwise. So that's kind of our shtick, and that's what we do. I don't want to talk for much longer in case you find it boring, but I'll take any questions.
Thank you, Ian.
Thanks, Ian. I thought that was really very interesting. One question for you is, how do you agree price? Because you could have one thing which is 500 lines of code widget that does something, and you could have 10 million lines of code that does something phenomenal. How do you set the price?
Well, it's free market. So I think it's a good question. One thing that we ran into with some of the first pieces of software we looked at was the business owners of the software said, I just spent whatever it is, $50 million making that thing. So I think the price is $50 million.
$55 million.
$55 million, or maybe 40. You know. And in the circumstance that the buyer's only alternative is to make the thing themselves, then maybe the price is $50 million. But that's very rarely the circumstance. And usually they can go and get it off someone else and they can buy something less good for $2 million. So one is establishing comparison points. Secondly, if you do go out there with a proposition that someone can sell something they got for $50 million, I guarantee you 5 more banks are going to say, I'll do it for 20. I guarantee it. So you establish a market straight away. And in fact, better still, an actual software company could come and do the thing with a fully qualified buying market and just build it on spec for less than that. And if it came to a race between a software company building it and a bank building it, the software company would win. So there's no way that $50 would be sustainable as a price point. But it's an interesting discussion. I think at the end of the day, what it comes down to is in the probabilistic sense, what's your expectation of revenue? How many times am I going to sell it at different prices to whom? And you optimize for that and you get your number.
Great, thank you.
Evening, hi. If the likes of GitHub haven't done this, are they just waiting for you to do it?
Well, GitHub's a piece of infrastructure which we love.
Yeah. But it has access to all the discrete lines of code which could be sold. Or should we say they can encourage those who contribute to package it up in such a manner? And if they haven't done it yet, is that a reflection they feel that it is in the market? And the fact that you're doing it, they'll just wait and go, well, if you're doing it, we'll just say, oh, look, they smell a rat. And they'll go, you're doing it, we're going to do it. And they have access to the market much more.
Well, let me tell you 3 things that we do that GitHub doesn't do. And they do a lot of things we don't do. But 3 things we do is if you want to find out tomorrow where it is that you might go and find yourself 300 exchange links, I can tell you that. No one at GitHub's going to tell you that. So there's a discovery process, there's a brokerage process, which is to say who are the buyers and who are the sellers. And if GitHub wants to do that, they're going to have to hire people doing new things that aren't doing what they do today. Secondly, if someone does give them one of those pieces of software and a potential buyer says, how good is it? Then they're going to have to figure out how to answer that question in a credible sense. And we spent a large part of last year figuring that out, which I think is possibly the honest work that we do, which is to kind of give a scorecard for the software that comes our way. And the third thing, and this is the killer, is if GitHub wanted to do it, they'd have to do the same legal work that we did. And let me tell you, that is not easy. Because we engage our own lawyers who work with us pretty much all the time that are burning through all of our money this year as we speak to work out what is that commercial agreement, what is that contract that you can get software companies, consultancies and banks to sign that enables this to be a shrink wrap process.
Ian, thank you very much.
Thank you.
Very good.